Hello, hello everyone. Happy new month to you. Good morning from here. It's 10:21 a.m. That's local time. That will be around 9:21 a.m. UTC. And depending on wherever you are tuning in from, I wish you a good afternoon and good evening. I'm very excited to welcome you to today's edition of the Forex Morning Mastery as we delve into the final trading day for the week. And one interesting thing about today is the fact that it also doubles as the first trading day of the month of August. And of course, we are definitely going to be seeing some involvement in the market, which is leaning towards a potential high volatility due to the turnout that it is expected today, especially as we look forward to the NFP report. So it's going to be, I expect it to be a very strong day. And today we are going to be looking at how we can strategically position ourselves for the next move the market is about to present to us. Before we go in, I would love to welcome the newcomers in the house. Those who are joining me for the first time, you're highly welcome on board. I'm very excited to have you around with me today. My own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I'm going to be your host as we delve into the financial market with the utmost intent of understanding what majority of market participants are thinking across the asset we are monitoring, and of course using that information to strategically position ourselves for the next move. So once again, I welcome you and encourage you to actively engage in the comment section. With that being said, here we will be diving right into the chart, and the first thing we normally do, of course, is to keep tabs with the fundamental factors, or let's say the sentiment around the US dollar market dynamic. And for those of you who have been with me for a while, you know how important this is, as this market plays a significant role around the assets we are monitoring. There is no way you want to be trading the Japanese yen, the crude oil, and of course the gold commodity without really having an insight into what is going on in this market. And of course, this week has started very strongly in the US dollar. As at the beginning of the week, we were looking at a beautiful confluence here around the $97.80 level, which was our key level, and of course that resistant line of the descending channel we identified prior to the beginning of this week. And we had to see now the possibilities of this resistant line to be respected one more time to push price to the downside, or price breaking out of that structure to incite another wave of bullish momentum. And of course, that was exactly what happened. We saw price broke out of the resistant line of the descending channel, went on to break out a key resistant line at the $99 area to establish an emphatic move for the week. And this move is not just happening on its own. It is fueled by very strong economic data from the United States. During the course of the week, we saw some interesting development. We saw, let's hold on. So the first one came in on Wednesday, where we saw the ADP employment change coming in higher than market had expected. We saw the GDP for the first time in about 3 quarters recorded a massive growth. We saw a 3% expansion in the US economy, way higher than what market had expected, and of course higher than the previous month. Then yesterday on that same day we saw the Federal Reserve interest rate decision. The Fed decided to keep interest rate unchanged, which is of course a positive one for the US dollar. And then we also had speech from the Federal Reserve chairman, where he did emphasize that the Fed isn't cutting interest rate anytime soon, which keeps the US dollar very, very attractive at this point in time. Then yesterday we saw the core PCE reports, a data that is considered to be the Fed's preferred interest rate gauge, and it came in just as market had expected. We saw a 0.3% for the month over month. We saw an increase for the year over year as at 2.8%, and it shows that inflation is picking up again in the United States. People are spending and earning more. Of course, we saw a 0.3% rise in income and spending as well in the United States. So the economy is doing very well at this particular point in time. And all of this tells the market one thing: the Fed is not going to be cutting interest rate anytime soon. And from what the chairman said as well, he also buttresses that fact. He made it clear this week that it's too soon to start cutting rates, and that stance put a floor under the US dollar, especially while other countries like Japan are still stuck in ultra low rate mode. So definitely the US dollar is on the high right now. So if you want to be trading the US dollar, you want to be looking out for patterns and structures that support buying ideas. Now, to further assess the strength of the US dollar, we saw President Trump just signed aggressive new tariffs, 10% to 41% on dozens of countries from India to Canada to Taiwan, and this is shaking global market and driving some safe haven demand into the US dollar. And also the US-China trade talk also collapsed again, adding more fuel to the fire. Now, the big one is today. Of course, we have some very interesting economic data lined up for today. By 12:30 p.m. UTC today, that's about 1:30 p.m. local time, we are going to be looking forward to some labor-oriented data. We have the average hourly earnings, all of which are going to be happening simultaneously. We have the big one today, the non-farm payrolls. Traders are expecting, from the report we see here, from the consensus we see here, market are expecting a slowdown in job growth from the 147,000 for the previous month. But any surprise could cause a big dollar move, and I guess there's going to be a surprise today, considering the labor sector has been doing very well. We saw the initial jobless claim count yesterday coming in at 218,000. We saw the the ADP employment change. It's also a labor-oriented data coming in at 104,000. Now, until the report drops, we are likely going to be expecting some cautious trading, a range-bound expected move, extended sideways trading activities as market participants wait for this event to happen. And if you look at the DXY chart here, you will see that we're beginning to see this reflect on the chart. The last 16 to 18 hours or so, the market has been a little bit consolidating, emphasizing the prevailing uncertainty ahead of the NFP. In summary, right now the US dollar has been lifted by strong data, a hawkish Fed, and a nervous global sentiment, all of which are pushing the dollar to the upside. Now let's go into the chart to see how the dollar is influencing the other assets we are monitoring. So as always, the first one we are going to be looking at here is the US Oil Spot, right? On the US All Spot, we had a massive move this week. We saw price move significantly all the way into the $70 mark. And since Wednesday, the market has been going through a choppy market condition. And what are the things that are influencing this narrative in the market? Though the crude oil is pulling back after a strong run at the moment, mainly due to demand fears sparked by Trump's tariffs and delayed Fed cuts. But supply risk from Russia's sanction threats are also propping up the weekly performance. Now, from the look of things, it appears that we are looking at some profit-taking activities, especially after this massive move we saw on Monday. Now, the market appears to be retracing, maybe as a result of profit-taking activities, of course. And we also have fundamental factors that are likely supporting this profit-taking activity. We saw the Trump's new tariff, which of course you know what that means, global shockwave, and it also leads to global slowdown fears and pressure on the US crude oil. Then we also have the situation where traders are being cautious at the moment, expecting that global trade wars could reduce oil demand going forward, and as a result, market participants will be a little bit skeptic on buying the US crude oil at this point in time. And we also learned that the US warned China of severe consequences if it keeps buying Russian oil, adding tension to the market as well. And for me, at the moment right now, I'm not seeing anything that can support the price of oil, especially as we head into the weekend. You know, weekends, we don't know what will happen. The market is not open, and most key players in the market who already had made some profit may likely want to start taking some profit off the chart ahead of the weekend because of the uncertainty that may come in. No one knows what will happen during the weekend. And besides that, traders are also waiting on the US NFP report, which could influence oil via the US dollar and economic sentiment. For those of us who are part of the bullish move on Monday / Tuesday, well done, kudos to you. And on Wednesday, we were able to identify a new trading setup, but it didn't really do well at all. We saw a little bit choppy market condition around that structure as I got stopped out. And immediately I got stopped, I just left the market. And today, as we head into the final trading day of the week, I'm beginning to see a new structure emerge on the 15 minutes time frame, and this is coming in the form of a descending channel. So since price tested the $70 level on Tuesday / Wednesday, we see price found some series of lower highs, and when we connect the series of lower highs, we have a resistant line of the descending channel, and when we connect the series of lower lows, we have the support line of the descending channel, and currently price is within this channel, making it clear that we are not looking to buy except the price gives us a significant confirmation. And with the way things are going right now, the last 1 hour, we've seen this engulfing bearish candle after testing that resistant line of the descending channel. I'm looking to see how far this one is going to go. Will it go to as far as the support line of the descending channel before another wave of bullish momentum will happen, or are we going to see price break out of the resistant line of this descending channel before we can start considering buying? And with the way things are going, I'm not likely to take any trade on the US Oil Spot today, as I will allow today to make the market breathe. Then on Monday, I will come up with new structures to guide my trading decisions. But if I see something significant like a breakout retest of this resistant line of that descending channel, this is likely going to be welcoming buying ideas. So I mean a breakout first of all, giving me the signal, then I need a confirmation in the form of a retest of structure before I can start considering buying. Remember, I told you the the fundamentals are not supporting the US crude oil at the moment. Fed is not cutting interest rate anytime soon, making the dollar stronger. And when the dollar is strong, the crude oil becomes very, very cheap. Sorry, very, very expensive for other currency assets to buy. Then the demand concern weighing on the bulls too is also there due to the trade war tensions and of course the increased supply, the increased inventory from the API and EIA report we saw during the course of the week. So with the way things are going right now, I will be very, very patient before jumping into any trade right now. For me to sell, I want to see a breakdown retest. I'll look for confirmations before I can trade the US crude oil today. So I'm laying low on this one. I'll keep watching, and if anything new comes up, I will definitely update us on my Telegram platform. If you have any questions, feel free to let me know in the comment section. I will take 5-10 seconds. Let's see if there are any before we move on to the next asset on our watch list. Stay tuned in. All right. So in the absence of no questions page, and it's on that note, we'll move on to the next asset on our watch list. So the next asset we are looking at this morning is the USDJPY. Another interesting week for us on the USDJPY, as we were able to capitalize on that massive move on Wednesday. I remember at the beginning of the week I told you that I missed out on that buy position after price broke out of that resistant line of the descending channel we marked out on the 4 hours time frame. And I did mention here that we have two options to take home if we are to trade this market at all. Price broke out, we missed out on the breakout, and I said we want to see price come back to retest structure before we jump into an uptrend scenario, or probably look out for an uptrend continuation pattern around this area, maybe in the form of a bullish rectangle pattern, pennant, flag pattern, whichever case it may be. But fortunately, on that Monday, we missed out on that opportunity. We was topped out from the buy position, and we waited for about 48 hours before the market came back to retest this particular structure, giving us the privilege to capitalize on an uptrend scenario. And I think we took advantage of this move right here during the Forex Morning Mastery on Wednesday. And of course, if you look at the bottom of your screen, I'm showing you the history. You'll see the two buy positions we took went into profit, $10 and $14 respectively. So it was quite a very massive move, as I wrote that move all the way into, what was my TP target again? Okay, 149.00 area. I didn't really max out that opportunity. And you know, I don't trade on Thursdays, so I didn't see this whole situation that happened yesterday. But for those of you who did capitalize on that opportunity, well done, and kudos to you. I'm sure you must be out of your buy position. Now, as we move into today's trading session, what are the chances that this uptrend will continue? Are we going to see price drop from here, or will the price continue the trajectory it started this week? Please give me a moment. I will be right back. I want to attend to something. I will be right back. All right, everyone, I'm back. I'm sorry for that break. I needed to attend to some things, but we are good to go now. And let me let you know, we have moved to my smaller screen at the moment, so you might find it a little bit difficult to see what's on your screen. I had to change our power outage. The sun hasn't been strong these days. The weather has been very cloudy, so we've not been able to charge the inverter effectively, but it's okay. I hope you can see what's on your screen. If you can't, I will suggest you use the landscape mode or probably connect your phone to a TV set for a clearer view. So like I was saying, I was talking about the USDJPY, and for those of us who capitalize on that massive move, well done. Kudos to you for being faithful to our analytical approach. Now, like I was saying, as we head into the final trading day of the week, we are beginning to notice that the last 10 to 11 hours or so, the market has been consolidating, right? We've been seeing some consolidation, which is very, very understandable, especially as we look forward to the release of the NFP reports. You know, major key players will want to step aside from the market, waiting for that data to come in before making any aggressive bet at this point in time. So we have a consolidation phase ahead of the NFP, and of course we are going to be using that to help us navigate the market. So currently the US dollar is in charge, of course, thanks to strong US economic data and a confident Fed who are saying that they are not thinking of cutting interest rate anytime soon. And on the other side of the pond, the Japanese yen is struggling to gather real bullish momentum. They tried to do so during the Asian session, as you will see. If you look at the chart here, I think we'll see things more clearly on the 15 minutes time frame. The Japanese yen made some attempt this morning to gain some strength. Let's look at it together. So we saw as soon as price tested the 150.900 area, we saw some series of lower lows and lower highs, and this is attributed to the situation around the US China talks, which didn't suffice, which didn't come in good. And usually such situations usually influences safe haven assets like the Japanese yen. And this there's some safe haven buying of Japanese yen in short, but not enough to cause a full reversal at this point in time. So I'm still very doubtful that the yen can gain any traction, especially when we saw the not too good economic figures from the Japanese economic docket. Let's look at it together. So because I've moved to a smaller screen, the thing looks a little bit bigger, so I will have to reduce the, okay, I think it's okay now. All right, so let's look at the calendar together. So the Japanese yen, they maintain interest rate at 0.5%, a very strong ultra loose monetary policy in Japan, as you can see. Then we also have what other report here from Japan? We had some very not too good reports from Japan. I'm not sure why FX Trade is not showing this. I saw Japan's manufacturing PMI dropped to 48.9, signaling a contraction. We also saw business confidence also, though went up slightly, but not enough to drive the yen higher. And then we also have the Bank of Japan, who is not ready to hike interest rates at the moment. The Bank of Japan earlier in the week downplayed inflation risk. So that is a no-go area regarding increasing interest rate in Japan. Then political uncertainty after Japan's recent election is also slowing down any hawkish move at the moment. The ruling party lost. Market are not sure what the incoming government fiscal policy is going to be like. So everyone is very doubtful and very cautious in approaching the yen at the moment. So for me, I think that the dollar still has a very strong chance of continuing its uptrend scenario, and I'm looking to continue buying the USDJPY. Now, if we look at the 15 minutes time frame here, of course, you can see that we have something that looks like a descending channel, right? We have the support line here, right? We're connecting the series of lower lows, and then if we connect the series of lower highs, we have this situation here. And one thing I have come to notice is that the last 4 hours here, we've seen that sellers have been trying to push the price to the downside. We saw the first attempt happen during the early hours of the London session, and this continued, as you can see here. And every attempt by sellers to break through that support line of the descendant channel and the 150.500 area, it's all failed woefully. And if you look at the character of the candles from that area, you will see there have been multiple hammer candles from that area. In fact, this last candle here closed with a hammer candle, and this for me is a sign that buyers are still present in the market. So Buying above the 150.500 is looking promising, and I do not want to be too ambitious here, so my TP is just somewhere around the 151.00 area. So let's see how the market is going to play out around this particular area. So I'm looking to buy the USDJPY, but we're still looking forward to see what the NFP is going to be like. We also have the ISM manufacturing PMI coming up later today before making bold moves. So we expect choppy moves till that data confirms a particular direction. And if we are going to consider selling, I would only consider that if price breaks down the 150.400 level. So let me mark that out so we can see 140.400 level. And why am I saying that? By the time price breaks the 140.400 level, it will have also broken down the support line of that descending channel, giving us a situation where price is within seller's territory. So the only condition that will make me sell the USDJPY is for price to break down the 140.400 area. I initially sold at the 150.5, but I've left enough room for price action to move around. If you look at the bottom of your screen, you will see that I have two positions running, one for buy and one for sell. So whichever case, whichever direction the market goes, one is going to take out and the other one will go into profit. So let's see how the market is going to play out from here. We have a simple trading setup, a descending channel, and the 150.500 level, which is expected to be the support line for the next bullish move. But if price breaks down the 140.400 level with a retest of structure, then we confirm a sell on the table. So this is what I'm using to navigate the market today. I wish us the best of luck. Questions, feel free to let me know in the comment section. So I'll take another 5-10 seconds. Let's see if there are any before we move on to the final asset on our watch list for today. Stay tuned in. All right. So in the absence of no questions, I guess we are all on the same page. And with that said, let's move right into the final asset on our watch list for today. Of course, for those of you who are with me on my Telegram and TradingView platform, you must have gotten an update to this particular one. So the XAUUSD on the chart, popularly known as the gold spot, and of course this week has been quite interesting, though we were expecting the price of gold to rise this week, but thanks to a strong US economy, the price of gold kept on dropping since the beginning of the week. It broke down both our key level at the 3,325 and of course the ascending trend line we spotted on the 4 hours time frame to incite a strong bearish move to the downside. Even as at Wednesday, I was thinking that price will still rise on this ascending channel, but you know how market does. It went the other way, and of course you know how we do it in this community. We always ensure that we keep tabs with both directions and see how we can position ourselves for the next move. And of course the sell position on our gold commodity was able to net out. Look at the bottom of your screen. I was able to make $84 from that sell move we saw on Wednesday. I think I had my TP around the 3,285 level, dovetailing to about 400 pips, I think, Was it 400? Is it 400? Yes, around 400 pips thereabout on that one. And for those of you who capitalized on the strong bearish move, well done and kudos to you. I do hope you close your trade at a very, very good price. I can remember updating us on Wednesday that we should move our stop losses after price moved over 850 pips on Wednesday. So once again, congrats to everyone. And of course, I know you must be out of that trade by now. So going into today's trading session, what are the chances that this bearish move will continue? Do we have economic fundamental factors supporting the US dollar against the gold, or does gold have any chance? Well, if you would ask me right now, gold is still caught between a strong and a mild safe haven flow due to global trade uncertainty. Now, the big trigger is going to be the NFP, and until then, I'm not expecting much follow through in either direction. We're likely going to see extended sideways trading activities going into that event, and this is already evolving on the chart. I saw this yesterday, Thursday. You can see what happened. The market did not have any clear direction. As we can see, price continued to remain confined within a range bound, which appears to be evolving into a descending channel. And when I scale down into the 15 minutes time frame, I think, was it yes, on the 15 minutes time frame, we had a structure to work with. This is what I saw